Hello, I'm Eddie Adkins. Welcome to my video, an overview of the Earned Income Tax Credit for 2020. This is a credit you claim on your tax return that's due in 2021. First, I'll tell you just a little bit about myself. I am a certified public accountant. I spent over 25 years as a tax partner in 2 different accounting firms. I'm retired now, and one of the things I'm doing in retirement is making videos to help people, hopefully people like you, understand tax issues. So welcome again to my video on the Earned Income Credit for 2020. My objectives for this video are really simple. First of all, to help you determine whether you might qualify for the Earned Income Credit. I'll do that by going through the requirements to qualify for the credit. So you'll find out by listening to this video whether you are qualified to take the Earned Income Credit. Do you meet all the rules, all the standards? And then importantly, very importantly, if you qualify, how much is the credit? That's going to be a key thing on your mind, is to know how much that credit is for you. I do want to say up front that kind of unfortunately, income tax rules are very complex. The Earned Income Credit rules are no exception to that. They're fairly complex. So I would just say to you, don't use this video or any other overview video for that matter to make a final determination as to whether you're eligible for the Earned Income Credit. If you really want to feel very, very confident that you do qualify, then I encourage you to watch my full-length video on the Earned Income Credit. It is a lengthy video, but it drills very deeply into all the requirements, and so it'll just give you an extra level of confidence. I will also say that if you know nothing about the Earned Income Credit at this point, I think you'll find this video helpful and easy to follow, but this video is around half an hour long. If you don't want to spend that much time, I do have another video that's a quick summary of the Earned Income Credit. It is only about 5 minutes long. If you want to go there, then take a look at that video, and then maybe you come back to this video. I have put links in the description section of this video for both my full-length video and my quick summary video, so you can find those very easily by going to the description section. What we're going to cover today are 3 things. First of all, I do want to explain to you how credits work, because otherwise you won't really have any idea what good the Earned Income Credit does you. So we'll talk about how credits work, and then we'll get into the requirements to claim the Earned Income Credit. So that's where I'm going to take you through all the rules, and you'll be able to go one by one through them and know whether you meet the requirements. And if I come to one that you don't meet, you can just turn me off. There's no more reason to keep listening to this video. And then finally, we're going to talk about the amount of the Earned Income Credit. And I'm actually going to enable you in this video to determine at least approximately how much your credit would be. That's of course assuming that you meet the requirements to claim the credit. So with that, let's just jump right in. So what's a credit? Well, the way a credit works is first, you're going to figure your income taxes just like you always do, which means that you're going to add up your income, subtract your deductions, you come up with your taxable income, then you go to a table that the IRS has put together that enables you to look up the amount of your taxes. So you still do that. A credit doesn't change any of those calculations. But then what happens is when you get a credit, like the Earned Income Credit, it reduces your taxes dollar for dollar. And the fact that it reduces taxes dollar for dollar makes it very, very valuable. I want to show you now 3 examples that really illustrate how valuable a tax credit is, like the Earned Income Tax Credit. There are other credits besides the Earned Income Tax Credit. The Earned Income Credit is one of the really, really valuable ones. So here's the first example. Let's say that you've calculated your taxable income, you've gone to the IRS table, and it tells you that your taxes are $2,500. But now you have figured out, maybe after listening to this video, that you are eligible for an Earned Income Credit and the amount is $1,000. So now your taxes aren't $2,500, they're $2,500 minus $1,000. See that dollar for dollar reduction? bringing your taxes down to $1,500. So that credit has saved you $1,000 in taxes. Let's go to the next example. In this example, we have an employer. So let's say that your taxes are, just keep the same numbers the prior example, $2,500, but you have an employer, and of course the employer withholds income taxes from your pay, and that's $3,000. So you've actually overpaid. So when it comes time to do your tax return, you're going to find that you've overpaid by $500, and you'll get a refund from the IRS. I know a lot of people look forward to getting those refunds every year. So you're due $500 back because your employer withheld $500 more from your wages than your actual tax liability. But now you have figured out that you're eligible for the earned income credit, and you've figured out that the amount is $1,000. Well, now the IRS doesn't owe you just $500, they now owe you $1,500. And so they're going to send you a check for $1,500. So again, very, very valuable to get the earned income credit. One more example before we move on, and this one, I love this example because I think it makes a really, really important point. Let's say that your income is low enough that your income taxes are zero. And I'm just going to keep it simple by saying that let's just assume that you had no withholding by an employer. So at this point, you don't owe the IRS anything, they don't owe you anything. But now you have figured out that you're eligible for the earned income credit. And by the way, you can be eligible for that even though you don't have any tax liability. You can still be eligible for the earned income credit. So let's figure out, or let's say you have figured out that you are, and then it's $1,000. Look at this. The IRS now owes you $1,000, and they're going to send you a check for $1,000. Here, though, I want to make a really, really important point. You have to file an income tax return to get it. So maybe because your income's too low to owe taxes, you don't have to file a return, you're not obligated to, but if you want the earned income tax credit, you do have to file a return to get it. So that's a really, really important point. You don't get it automatically, you have to file. Now, I've been using $1,000 in my examples, but look at this. The earned income tax credit for 2020 can be as high as $6,660. Now, not everyone gets that amount. It depends on several factors. I'll be getting into that later. And as I said earlier, I actually show you tables where you can get a good idea of what your credit is. But that's a big number, $6,660 that you may be able to get. So definitely worth continuing to listen to this video and learn more about the earned income credit. So now we're ready to talk about the requirements to claim the earned income credit. So I'm hoping that as I go through these, you can check them off, yes, 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 and find that you're eligible. But again, at any point you don't meet the requirements, you can just turn me off and stop listening to this whole video about the earned income credit. The first requirement is to get the earned income credit, you must have earned income. It's called the earned income credit after all. That's why it's called the earned income credit. It's because you have to have earned income to qualify for the credit. It's a credit essentially that's meant for working people. And earned income is defined as money you have to work for to get. So it's things like wages, salary, tips. If you're self-employed, it's your self-employment income. It's not money for work you did in the past. So if you're getting retirement benefits from an employer, if you're getting Social Security benefits, if you're taking withdrawals from, say, a 401k plan, that's money you worked for, but that was work you did in the past. So that does not count as earned income. It's also, unfortunately, not unemployment compensation or workers' compensation. So that's the definition of earned income. So stop and think, do I have earned income? If you do, then you're on your way to qualifying for the earned income credit. And of course, most people do have earned income. So that's the first requirement. Importantly, if you are married filing jointly, only one of you is required to have earned income. I really wanted to make that point. You don't both have to have earned income. It's certainly fine if you do, but that is not required. Only one of you needs to have earned income. Now, to get the earned income credit, your income cannot be higher than a certain amount. So that's the second requirement I want to talk about with you. So the gist of this is that the earned income credit is not meant for higher income individuals, and they do not qualify for the credit. The credit is for what the IRS refers to as low to moderate income taxpayers. So you have to make under a certain amount of money in order to qualify for the earned income credit. A major factor in determining that number, in other words, the number that you have to make less than that number to qualify for the credit, a major factor in determining that amount is how many qualifying children you have. So it's not like one number that applies to everyone out there. It depends on the number of qualifying children. It depends on another factor too, but that's the major factor. So what I need to do now is talk to you about qualifying children so you can figure out whether you have any qualifying children, and if so, how many. And I will tell you that just so you don't run away too quickly, you don't actually have to have any qualifying children to get the earned income credit. It helps, but it's not an absolute requirement. So who are qualifying children? Here's what I want you to do. As I go through this, think about whether you have any qualifying children, and if so, how many do you have? So let's go. First, they have to be related to you in a certain way. So a qualifying child is your child, adopted child, stepchild, foster child, or any of their descendants. So when I say any of their descendants, that means, for example, your grandchild or your great-grandchild. Can also be your brother, sister, half-brother, half-sister, stepbrother, stepsister, or any of their descendants. So their descendants would be your niece, your nephew, your grandniece, your grandnephew, and on down the line. So those are the relationships for qualifying child. Any other type of relative is not a qualifying child. So it has to be one of those two categories. That's the first requirement. So think about people related to you in that way as you're starting to count up your qualifying children. The next requirement is they have to meet certain age requirements. And those are that they have to be under 19 as of December 31st. So that means for the 2020 earned income credit, they have to be under 19 as of December 31, 2020. If they are a full-time student, then that age increases and they just need to be under 24. Next, they do have to be younger than you. Now you may say, that's really silly. Of course my child is younger than I am. Very true. But what about a brother or sister? You could have an older brother or sister, certainly. They're not going to be your qualifying child. It would have to be a brother or sister who's younger than you. I will note here that if the relative is disabled, then these age requirements do not apply. Otherwise, they do apply. And then also, they have to live with you for more than half the year in the United States. So more than half the year actually living with you. A couple really important points here. One, it does not matter who pays for the living expenses. This is not at all about who pays for the support of the individual. It's purely where do they live. So if they live with you more than half the year, then and they meet these other tests, they're related to you in the right way, they're under the age that we have here, then they're your qualifying child, even if someone else is actually paying you support and paying the expenses. Another important point about living with you for more than half the year is exceptions for temporary absences. One example of this is you have a child who's away at college. Well, they're not living with you when they're away at college, but that's what's called a temporary absence, and you're actually allowed to count that time when they're away at college as if they're living with you. So that helps you meet the requirement that they're living with you for more than half the year. In addition to those three major requirements, they do have to have a Social Security number for you to be able to count them as a qualifying child, and they generally cannot file a joint return. So for example, if you have a child living with you who's married and they're filing a joint return with their spouse, generally that knocks you out of being able to count them as a qualifying child. There are some rules that might let you do that, and I cover that in my full-length video. That's the type of kind of special rule that causes me to say consider listening to my full-length video so you can hear all those sort of special rules. So what I want you to do now is just stop and think about how many qualifying children you have, because that's going to be an important factor in determining how much money you're allowed to make and still claim the credit. And then when we get to actually determining the amount of your credit, it's also an important factor there. So think about how many qualifying children do I have. Now we can move on and look at this table, and here's what the table says. If either your earned income or your adjusted gross income is equal to or more than this amount, you can't claim the credit. Look at this table. It has 8 different numbers in it. So let's go through this carefully. So the first thing you're going to see, I hope, is it says number of qualifying children. So you look down that column and you say, do I have 0, 1, 2, or 3 or more qualifying children? With the earned income credit, once you get to 3 qualifying children, it doesn't matter how many more than 3 you have. It's always just 3 or more. So you look there and then look at the 2 columns. One says single head of household qualifying widower. The other says married filing jointly, in which case you're looking at your combined income. So the dollar amounts that you can make and still claim the credit depend on your filing status. Are you single or married filing jointly? You cannot take the earned income credit, by the way, if you're married filing separately. You're not allowed to take it if you're filing separately. So these are the numbers, but notice it says if either your earned income or your adjusted gross income is equal to or more than this amount, you cannot claim the credit. We've already talked about earned income, so you have a good idea of what that is, wages, salaries, tips, etc. But I do need to talk to you about adjusted gross income, because you also have to know that number to know where you fall in this table. So what's adjusted gross income? Well, you start with your earned income, and then what they have you do to get to your adjusted gross income is add the taxable portion of certain items like interest, dividends, capital gains, retirement distributions, etc. You can see the little list here. Then you subtract certain items like capital losses, deductible portion of self-employment taxes. If you've made contributions to a self-employment retirement plan, you would subtract those. So just think about 2 things. What do you think your earned income is for 2020? Just get a general idea of that. And then think about your adjusted gross income. It's quite possible that you don't have any of these adjustments here, but if you do, just try to get a good idea of those so you have an idea now of what your earned income is and what your adjusted gross income is. Now let's go back and look at this table. So think about how many qualifying children do you have? What's your filing status? Single, basically, versus married filing jointly, and find the number in this table that pertains to you. And then say to yourself, is either my earned income or adjusted gross income equal to or more than the amount in this table? If it is, then you do not qualify for the earned income credit. You simply make too much money and you don't qualify. So let's just do one quick example. Let's say that we have someone who has 2 qualifying children and they're single. Look at the number in the table. The number is $47,440. If that person makes $47,440 or more, then they can't claim the credit. They make too much. So in other words, they need to make less than $47,440 to claim the credit. So at this point now, you should have a good idea of whether your income is at a level where you qualify for the earned income credit. So now, let's go on. Here are the additional requirements that you have to meet for the year you're claiming the credit. So we've gone through 2 already. You have to have earned income, and your income has to be less than a certain amount. So what are the additional requirements? Number 1 on this list, you cannot file your return as married filing separately. I did mention that already, just wanted to mention it again. Next, your investment income cannot exceed $3,650. That's the 2020 amount. That number does change every year based on inflation. As actually the numbers in the table I just showed you, those also change every year based on inflation. So investment income is things like interest and dividends and capital gains. So they do limit how much investment income you can have and still claim the credit. Next requirement, you must be a U.S. citizen or resident alien all year long. Obviously, I think everyone knows what U.S. citizen is. Resident alien is something I explained in my full-length video. Next, you, and if you're married, married filing jointly, your spouse also must have a Social Security number. You just have to have that by the due date of your tax return. Next, you cannot be filing Form 2555. That's a form that deals with foreign earned income, and it's actually used to exclude foreign income from U.S. taxation. A lot of people, that's not applicable to them. Obviously, if you don't have income from foreign countries, you don't have to worry about that. And then finally, there are actually 3 requirements that apply only, and I want to really emphasize this, 3 requirements that apply only to individuals who have no qualifying children. So if you have counted up qualifying children and you have 1 or more, don't listen to this last part, this last point I'm going to make right here. But if you have no qualifying children, then we have 3 more requirements for you. You have to live in the United States for more than half the year. You have to be at least 25 years old, but under 65 as of the end of 2020. And you can't be counted as a dependent on someone else's tax return. So those are the requirements. You should know now, have a pretty good idea at least, of whether you qualify for the Earned Income Credit. So we are ready to move on to, I think, what's the most exciting topic in this whole video, which is the amount of your Earned Income Credit. So you're eligible, you meet the requirements. How much money do you get? What is that dollar for dollar reduction of your taxes as a result of the Earned Income Credit? Well, it's a little bit complicated, just a little bit complicated, or some people might say a whole lot complicated, as to what your credit is. It's not a simple thing. It's based on 3 factors. Number 1, the number of qualifying children. So keep that number in your mind. Also, your income tax filing status for the year, just as we saw on the table. Basically, are you single versus married filing jointly? And then it also depends on your income level for the year. And if you're married filing jointly, of course, that would be your combined income. Now, the formula to calculate the credit is extraordinarily complex. It is unbelievably complex. But good news, no worries, you don't actually use the formula. The formula is too complicated. No one expects you to use the formula. And instead, the IRS puts together a table every year that you go to determine the amount of your Earned Income Credit. And that's the way it's done. The only people who actually have to use the formula are the IRS when they prepare the table. Here's what the table looks like. It's actually 9 pages long. You'll find it in the instructions for Form 1040, the U.S. Individual Income Tax Return. Here's just a little snapshot. What you do is you go in, you look up your income, your earned income, in some cases your adjusted gross income. Gets a little complicated as to which number you use, and I cover that in my full-length video. Generally, it's your earned income, though. And then you go over, and there's a set of columns for single, there's a set of columns for married filing jointly, and then within those, it's based on the number of qualifying children. So you go in, you go through the pages and pages of the table, you find your income level, and that will show you what your Earned Income Credit is. Now, as you can imagine, if I went through all the pages, the 9 pages of the table in this video and did it slowly enough so that everyone watching this video could find their number, it would take a long, long time. So we're not going to do that. What I'm going to do is just show you representative numbers from the table where you can see a number that's pretty close to your income and you'll get a general idea of what your credit will be. Now, this next thing, you have to indulge me a little bit. I didn't want to leave you completely in the dark as to how the credit is calculated. So I wanted to show you this chart. If you're not interested in how it's calculated and how the IRS comes up with the numbers in the table, just skip through this. But I thought some of you would be interested, so I did want to cover it. So this is an example for a single taxpayer with 1 child. But we could do examples for all the other situations, married with 3 children, etc. And it would look very much like this. This just gives you an idea of how the credit is calculated. And what happens if you look at this closely is look down at the bottom where it says earned income. notice it goes from 0 over on the left side and keeps getting higher and higher and higher. Then notice also over on the left side, the earned income credit amount goes up the page, starting at 0 and getting higher and higher and higher. So the way the formula works is that the lower levels of income, the higher your income, the higher the earned income credit. Then it reaches a point where at a higher level of income, what's called the plateau, everyone within a certain range of earned income gets exactly the same dollar amount of earned income credit. And then we reach the third group, which is called the phase-out group, where, interestingly, the more money they make, the lower the credit until we reach, at the very bottom of the line there, the point where you make too much money and you don't get the credit at all. So that's what the formula looks like. That's why it's so complicated. It's just not a straight line going up or down or across. It's a mixture, and that makes it very complex. But again, we don't really have to worry about that because the IRS has done the work for us by creating the table. Okay, now, before we start looking at tables where you can look up an approximate amount of income and see what your credit would be, I just need to tell you about a very special rule because this rule could really have an impact on you. It's a special rule that applies for 2020 only. It was created because of the coronavirus. The normal rule is that when you calculate your credit for 2020, you would use your 2020 earned income. Of course, that makes perfect sense. That's the way it's done, always has been done in the past, with some exceptions for special rules in some prior years. This year has a special rule that says if your 2020 earned income is less than your 2019 earned income, then guess what? You get to choose. When you calculate your 2020 earned income credit, you can use either your 2019 earned income to calculate it, or you can use your 2020 earned income to calculate it. Now, what you want to do is calculate it both ways. So go look up in the table, in the IRS table, your 2019 earned income and see what that would give you as a credit for 2020, and then look up in the table your 2020 earned income and see what that would give you as a credit, and then just pick the higher of the two amounts. It's as simple as that. The answer won't be the same for everyone because it depends where you are in that complex formula as to whether this election to use your 2019 earned income to calculate your 2020 earned income credit, whether that makes sense or not. So you just really have to do it both ways and see which gives you the higher credit. But it can be a really interesting or really important, really valuable election to make. It's totally voluntary. The reason for the special rule, Congress made this rule, they were concerned that because many people have a drop in income in 2020 due to the coronavirus, that would end up lowering their earned income credit for 2020, and perhaps people who have really come to rely on the earned income credit. So they did not want that loss of income in 2020 to hurt people, so they made the special rule allowing you to use your 2019 earned income to calculate your 2020 earned income credit. That's a mouthful, but I hope that helps. It is a very, very important rule. Okay, so the tables that follow are going to allow you to estimate the amount of your earned income credit. Your income, of course, is one of the major factors in determining the amount of your earned income credit. I need to tell you that at lower levels of income, when you go to the IRS table and the tables that I'm going to show you, at lower levels of income, you use your earned income. At higher levels of income, they make you use the greater of your earned income or adjusted gross income that I talked about earlier. Now, for some people, the two numbers are the same. For other people, there's not a lot of difference in the numbers. But if there's a big difference in your earned income versus your adjusted gross income, you need to be really aware of this. The rules about when you have to use the greater of earned income or adjusted gross income versus just using earned income are very complicated. I cover that in my full-length video. So if you do feel like you're in a situation where earned income and adjusted gross income are very different, you may want to go to my full-length video to get more information about that. Here's the first table. This table is for married filing jointly. I've actually separated married filing jointly from single just so we don't have too many numbers on the same page. So we'll do married filing jointly first, then we'll go to single. So this little table that I put together, and these are numbers that I took directly from the IRS table, show various levels of income going from $1,000 to $15,000, and I'll have a table later that goes higher amounts, but for now we'll look at this. And all you do is you say, what's my income? And if your income is close to one of these numbers, then this is going to give you at least an approximate idea of what your earned income credit will be. And notice that it is based on the number of qualifying children. So you need to look up the number in the column that has your number of qualifying children. Let's do a real quick example. So you're married filing jointly, your combined income is $15,000, you have 3 or more children, qualifying children, then your earned income credit is $6,660. So that's an example of someone who gets the maximum credit for 2020, $6,660, that number that I mentioned earlier. Let's sort of take the other end of the spectrum. Let's say that you're married filing jointly, your income's $1,000, you have no qualifying children, you will get a credit, but it's only $78. Let's move on to the next table for married filing jointly, where I increase the income amounts. Again, think about your income amount and get a number on this table that's close to your income amount, and you can get a good idea of your earned income credit. So let's do another example. Let's say someone married filing jointly, combined income is $30,000. They have 2 qualifying children. The amount of the earned income credit is $4,908. Notice that if you're married filing jointly, your combined income is $60,000. You make too much money, no matter how many qualifying children you have, you do not get any credit. You simply make too much money. Now let's look at single head of household, qualifying widow or widower, same format of the table, just different numbers because of the filing status. So again, you're going to look up your income. Hopefully you can get your specific income number pretty close to numbers here, and look across at the number of qualifying children and figure out what your credit will be. I'll do an example of a single person making $10,000 with 1 qualifying child. Their credit will be $3,409. Let's go now to higher income levels for single individuals. And you can look here, look up your number. What you'll notice here, look at the bottom number, 55,000. Any single person with income of 55,000, no matter how many qualifying children they have, they make too much money and they don't get any credit. So hopefully now you've been able to figure out at least approximately the amount of your earned income credit. So we have covered how credits work, requirements to claim the earned income credit, and the amount of your earned income credit. Again, please, if you want more information, watch my full-length video for a more detailed explanation of the earned income credit. I'll go into these rules in a lot more detail, and really, I think if you watch that, you'll feel like you have a really thorough understanding of the earned income credit. So I do hope you'll watch that video. I want to thank you so much for spending this time with me. I hope you feel like you've learned something, you've benefited from the video. Thank you so much, and take care.